Hey there, so in this video I'm going to quickly explain how liquidation works when margin trading. Now this video is on margin trading only and not on futures, as that's a little bit different. There's going to be a separate video on that. So if you didn't already know, liquidation, it's basically when your assets are sold off, leaving you with nothing. It happens when the value of your assets or your coins becomes the same value as your debt. In other words, your asset to debt ratio is 1-to-1. This means that if you had coins of $100 and you also had borrowed coins of $100, then that means your coins would automatically be sold off to pay off your debt. And I hope that makes sense to you and why you wouldn't want to get liquidated, because basically you're left with nothing. So here is kind of an example. You have $1,000 and borrow $2,000 to enter a trade. Your assets are now worth $3,000, which is the $1,000 plus the $2,000 that you borrowed. So this ratio is 1.5-to-1, which is the $3,000 divided by the $2,000. So what this would mean is that liquidation would happen if the value of the assets or the coins goes to $2,000. This means the asset to debt ratio becomes 1-to-1, which is the $2,000 divided by the $2,000. Now, one thing that you should keep in mind though is that each exchange has their own margin requirements. Margin is the amount of collateral that you need. This will vary depending on what you're trading or where you're trading. So you just got to keep that in mind. Now, as an example, for BINANCE, on 10x leverage for isolated trading pairs, these are their ratios. They have different tiers. They have 10 tiers over here, and they have different ratios for different things. So as an example, the liquidation risk ratio is this over here, but then a margin call ratio is this over here. So using the previous example, the assets value would have to drop to $2,100 before getting liquidated, which is the $2,000 times 1.05. Now I'm getting this 1.05 from this over here, which is the liquidation risk ratio. So that's that number there. So basically at $2,100, you would get liquidated at a ratio of 1.09, which was the number I took from before. If you look over here, this is the margin call ratio, which works out to be $2,180. Again, it would be 1.09 times the $2,000, which then gives you this number here. You'd get a quote unquote margin call, which is basically a warning that you will get liquidated if you don't put more coins in as collateral if the value of the assets continue to decrease. So essentially there's a buffer of $80, which is this number here, subtract this number here. So that is the $80 difference or $80 buffer. Now, if we look at a different chart that Binance has, and this is for 5x leverage on isolated trading pairs, their numbers differ as well. So they have 1.15 and 1.19. So again, these numbers vary from product and possibly coins, and also possibly how you decide to collateralize your debt. Again, wherever you're trading on, you'll want to make sure what these ratios are. I'm just using Binance as an example. Again, if we were looking at the previous example, the assets value would have to drop to $2,300 before getting liquidated, which is the 2,000 times this liquidation ratio, and then at a ratio of 1.19, which is this value here, $2,380, you'd get a quote unquote margin call. Again, the buffer is $80. That's the difference of this here, $2,380 minus $2,300. So having said that, when you are margin trading and to avoid getting liquidated, what you'll really want to do is you want to make sure that you keep your eye out on that liquidation ratio and really make sure that you've got a good margin of safety and that it's above their requirement. You'll really want to make sure that your asset to debt ratio is greatly above the specified margin requirement ratio. So there you have it. That's how liquidation works when margin trading. But anyways, if you're interested in getting the most up-to-date and relevant content in the Canadian crypto space, go to www.cryptoforcanadians.ca. Thanks for watching, and I'll see you in the next video. Bye for now.